Hello, today is December 8th, 2022, and it's time for some new stock picks. As always, I'm going to review the performance of my picks from this time last year and then talk a little bit about the market conditions at the moment and give some new stock picks and the rationales behind the picks. This time last year, I picked Ingles Markets, a chain of grocery stores, which was up 24.7%. I picked Encore Wire Corp, an industrial company, was up 11.9%. And I also picked Tricon Residential, a real estate company that was down 43.3%. In retrospect, that was a mistake. I picked it at the time thinking the rents, they own residential real estate, multifamily homes, single-family homes that are being rented out. Rents up very nicely in the markets that they operate, as much as 20%. So their earnings are up, but being a public company, investors see that the valuation on the balance sheet of the real estate that they own should be going down, and the sell in anticipation of the market, the real estate market going down. So that's why that was down so much, due to primarily the interest rate increases. Now, having said that, the average of the performance of those three stocks was negative 2.3%, which beats handily the market as represented by the MSCI World Index ETF, URTH, which was down 14.8%. I'm reviewing my notes here and my picks from last year, and it seems that my picks beat the market 11 out of the 12 months in the calendar year. And each month there were completely different stocks, with the exception of 1 month that had a double. So 35 different stocks, 3 per month. 11 months out of 12 months, they beat the market. So it's pretty good. Now, the conditions we've been talking about all year, that we are facing higher interest rates and possibility for recession, in my opinion, we're not going to know until we get the data sometime next year. We probably are in a recession globally in 2022. And even if we aren't, we're going to be close to zero. And a lot of people are expecting the recession will continue into 2023, with things possibly getting worse for U.S. and Canada. So under that scenario, you typically want to be in higher quality businesses that can withstand the recessions. But then the market typically bottoms 6 to 9 months before the recession is over. So it's really hard to time from that perspective. And at that point, the more cyclical and lower quality stocks and the ones that got beaten down the most outperform. And so my perspective at this point now is it's kind of hard to time the absolute bottom for the market. So I'm going to stick to picking good quality stocks at good prices. And if we have a few more months of economic and or market turmoil, so be it. My first pick this time will be a property and casualty insurance company, RLI Corp. They have been doing quite well during this last year and before that. I think property and casualty companies are interesting in a rising rate environment because typically insurance companies match the duration of their assets to the duration of their liabilities. That means they hold shorter term bonds quite a bit. And insurance companies and other investors that held longer term bonds in 2022 saw the value of those bonds decline substantially. And if you only held shorter term, not only did you not get a big drop in the valuation of your portfolio, but you also got to reinvest the money at much higher rates than you were getting before. So that's something that's not within the control of this business, but it's a tailwind, as they say, for the business, so we'll take it. So that's stock pick number 1. And 2 other picks here, they're going to be good businesses where the stock price has gone down enough that they become quite interesting. And one of them is going to be, again, Tricon Residential, the pick from last year. I've got to mention that we actually sold that stock for clients sometime in the spring as it became apparent that rates were going to have to go up more than most people expected this time last year. So at that point, the stock was only down maybe 15% or so, but it ended up going down for the year something like 42%. So the business is still quite good. The income from the rental income from the properties that they own and manage has gone up, yet the stock price is down quite a bit. So that makes it perhaps a more interesting price to get into. So that would be stock pick number 2, Tricon Residential, symbol TCN, I believe. And the third pick is going to be an industrial company, Celanese, symbol CE, the world's largest producer of acetic acid and downstream derivative chemicals, kind of a chemical company. Typically, these sort of businesses tend to be cyclical, so they deteriorate during recessions. But I believe a lot of that expected deterioration is already priced in the stock, and with the stock being down some 39% year to date. So getting a good business at a good price, again, there could be some headwinds with the economic activity slowing down in the next year or so, but always a good idea to buy good businesses at a good price, and this fits the bill. As always, if you'd like a second opinion as to whether these stocks fit in hopefully your already well-diversified portfolio, or if you have any other questions investment related, please give us a call. Have a great day and happy holidays.